Asia Morning Briefing. Crypto's next breakout will come from infrastructure, not narratives, Hash says. The Korean venture firm's 2026 thesis argues that stablecoins, AI agents, and on-chain credit markets are becoming the foundation of a real digital economy, with Asia emerging as the first region where enterprise adoption is taking shape. Welcome to Asia Morning Briefing, a daily summary of top stories during U.S. hours and an overview of market moves and analysis. For a detailed overview of U.S. markets, see CoinDesk's Crypto Daybook Americas. Hash says the crypto market is finally shifting from storytelling to structure, and that 2026 will be the year digital assets start behaving like an economy rather than a speculative category as stablecoins become global settlement rails and AI agents emerge as autonomous economic participants, reshaping where real investable value lies. In its Protocol Economy 2026 report, which acts as its investment thesis for the year, the Korea-based VC firm argues that Asia is where this transition is becoming visible, with regulated stablecoin pilots, early AI agent deployments, and expanding RWA and treasury workflows forming the first on-chain enterprise systems. Hash says the investable frontier is now anchored in these structural layers, where payments, credit, and settlement move on to programmable rails and applications evolve into adaptive economic systems driven by stable liquidity and verifiable demand. The firm is concentrating capital on teams with real users and compounding on-chain activity rather than projects tied to momentum narratives. Hash frames this shift as a correction from the past 2 years, when excess liquidity and speculative flows obscured which parts of the stack were generating real usage. The firm says the data now points clearly to stablecoins, on-chain credit, and automation infrastructure as the categories where activity compounds rather than spikes. That trend is especially evident in Asia, where regulators in Korea, Japan, Hong Kong, and Singapore are building frameworks that allow stablecoin settlement, tokenized deposits, and RWA issuance to plug into existing financial systems. Hash argues that AI will accelerate this transition because agents can route payments, manage liquidity, and execute transactions programmatically, thereby creating demand for transparent rails. This next phase of growth will favor builders working at the intersection of real liquidity and automation, where digital assets operate as economic systems rather than speculative instruments. And that is where Hash will be investing. BTC. Bitcoin is drifting around $92,000 after failing to hold an overnight move toward $94,000, reinforcing the view from some analysts that it is settling into a low liquidity range between $85,000 and $95,000. ETH. Ether is holding above $3,100 and outperforming Bitcoin on the day, slipping less than 1% as the broader market trades sideways. Gold is oscillating around $4,200 in a tight consolidation as a weaker US dollar offers support while higher treasury yields and firm risk appetite limit follow through, leaving the metal biased higher but still trapped in a range ahead of key US data. Nikkei 225. Asia-Pacific markets opened lower Friday, with Japan's Nikkei down 1.36% and the Topix off 1.12% after a muted Wall Street session. Stablecoin adoption could stifle central bank control, IMF warns. Decrypt. Canton Network creator snags strategic investment from Wall Street giants. CoinDesk. Solana ETF see record outflow as 21 shares. TSOL bleeds $42 million. Decrypt.